What's up traders, welcome back to my YouTube channel. So this is going to be a quick breakdown of the price action we had last week, being the US election. There was a lot of volatility in the market, which was expected, and it was an all-day high impact news. So two things are likely going to happen, right? It's either you lose your money, you blow your account, or you make a whole lot of money from the market because of the volatility. Personally, I enjoy a whole lot of volatility. I love volatility. That's why I traded Nasdaq, and exactly specifically after the 9:30 opening bell, because that's when the pumping volatility. So for those new to the channel, we look at liquidity's fair value gap, and we just study the concepts together. But for today, this is going to be a quick breakdown of the trades I looked at during the week and all. So let's delve right in to. So this is sell side liquidity right here. Sell side liquidity, and we had this bearish fair value gap. So once price has taken a sell side liquidity, for those of you that have been in the channel and studied my review for some time, you know that once price has taken a sell side liquidity, I'm no more interested in taking a sell. Now we have a bearish fair value gap at this point here. Firstly, you would see this as a bearish fair value gap here. You would see this as a bearish fair value gap. That's what your eye should be drawn to immediately. Then, just at that bearish fair value gap, you look at how price is reacting to that bearish fair value gap to validate if that is going to be an inversion fair value gap. So you cannot just call it an inversion fair value gap because you don't know if it's going to be an inversion fair value gap. It's just the behavior it is giving you. That's how you trust that is going to be an inversion fair value gap. Now you see that price has taken a sell side liquidity here, retraced back to this inversion fair value gap here. Initially a bearish fair value gap, let's not call it an inversion fair value gap yet. Retraced back to this fair value gap, traded back to this sell side liquidity. Then our interest would be to see it displace. Initially we are just watching the behavior around here because it has taken a sell side liquidity, so we're not really interested in doing much, right? Then displaced higher. Once it displaced higher, now we have a bullish order block at this point. Let me take this out. So we have a bullish order block at this point. See how it retraced back to this bullish order block. Now we're having the candlestick has traded out of this bearish fair value gap, which is what it was initially. Having that just broken out of this bearish fair value gap, it becomes an inversion fair value gap. And you see how it has taken out this swing high here. Now this is a shift in market structure because it has taken out a low, and we have a serious displacement to the upside. We had this bullish fair value gap here. So you can take this as a shift in market structure, which is also a change in state of delivery, showing that price has now changed from a sell side delivery because it has taken a sell side liquidity here to a buy side delivery. And you see how in this sell side delivery curve we have a lot of black candles, and now in this buy side curve here we have a lot of green candles. So you should have every reason to start thinking of possibilities of buying. So you look at it in a trend following style, right? Following the trend, because these trends are only formed when we have expansion to the upside or expansion to the downside. Once you have expansion to the upside, it creates bullish fair value gap, which you are to follow. Once we have expansion to the downside, it creates bearish fair value gap. So you just want to be in line with what is happening with the bigger money, because the bigger money will always pump in liquidity for us, creating fair value gaps and expansion that would cause fair value gaps. So now this here validates a shift in market structure. Just this price trading out of this inversion fair value gap, or let's say a bearish fair value gap, trading out of this bearish fair value gap validates a shift in market structure, and also making it to become a also making it to become an inversion fair value gap. So now where's our target going to be and where's our entry going to be? So the entry is going to be just right at probably this. If you want to be a little bit aggressive, you can use it. You can use this bullish fair value gap here to take it to this buy side first as your partials. Then you can hold it for this here as your next target. I advise you take profit at every buy side liquidity or sell side liquidity. Assuming that you were in this sell and you did not take your profit at this sell side liquidity here, you've seen how this reversed on you, right? So that's why I say at every buy side liquidity and sell side liquidity, you take your profit. Okay, so now it is taking a buy side liquidity here. This is your target here, and that would just be okay. Remember what I said, that this inversion fair value gap here validates a change in state of delivery. So that's how you trust that we've left a seller's program to a buyer's program. So this was how this trade here was built. And also you notice that this time frame now is the 1 hour time frame. For those of you saying I'm using the 1 minute time frame, if this is also relative to the higher time frame, yes, of course. Whatever we have in the lower time frame, price action is also replicated in the higher time frame. Price is not random. Okay, in the lower time frame, it's not so noisy as a lot of people see it as. So it's the same thing. It's just about you and what you can endure. I like taking my decisions in the moment, right? So we have this other block here. This could be another entry just at this point. So that's pretty cool. Now let's also look at this here. Let me take this out. So now we had that once price is taken out to sell side liquidity here, you see how it started going up and you started having green candlesticks. So this was a little bit clearer in the lower time frame, that was in the 30 minutes time frame. Note we have this buy side liquidity here. This is a buy side liquidity even if I've not annotated it. For those new to the channel and new to the concept, every swing high is a buy side liquidity, then every swing low is a sell side liquidity. This sell side liquidity here is more obvious in the lower time frame. Let's go to the 30 minutes so you see clearly. So we have once price takes out the sell side liquidity here. Now this is also the same case as you saw in the last trade. So firstly, you would see this as a bearish fair value gap because we've had this displacement to the downside. Right? We've had this displacement to the downside creating bearish fair value. A lot of people will be looking to take this as a sell. A lot of people trading the 2022 ICT mentorship will looking to take this as a sell. Now you cannot just say that this is going to be a bearish fair value gap. You cannot just say that this is going to be a bearish fair value gap, right? Because you don't know what price is going to do. You cannot control the market. The only thing you can control is the money you're risking in it. You cannot control the price action, what price is going to do next. You can only control your money and your risks. So once you have the price that's traded outside of this bearish fair value gap, this validates it as an inversion fair value gap. But to add to that, it is taking a sell side liquidity. So this is even a more stronger inversion fair value gap. You can trust that any price behavior here is going to come back to this as an order block, any PD area at all, or a bullish fair value gap, then continue to a buy side liquidity here. So this was the framework the trade was built on. Also, you can look at it as price reaching a level of support or resistance. But if you have this narrative like this belt, then you would be safer than those that trade the support and resistance. So because you wait for price to take out this area, which a lot of people will be seeing it as support, you wait for it to react off that, and also you wait for it to break out of probably a bearish fair value gap to turn to turn the bearish fair value gap to an inversion fair value gap, then you can take it to a buy side. Literally, you're trading based off this as support. Then same thing here. Same thing here. Let me zoom. Same thing here. You look at this price has taken this sell side liquidity. You're not interested in taking any sells, because just at this point here, there is always a potential reversal. But the difference between you and the person that's trading is support and resistance is sound narrative. For you, once it has taken a sell side liquidity like this, which a person is seeing as support waiting for bullish engulfing candlestick, you allow price to do what it wants to do. You wait for more information. Once price trades out of this inversion fair value gap, initially which you'll be seeing as a bearish fair value gap. Let me go to the 1 hour time frame so you see that clearly. That happened in the 1 hour. Once price trades out of this bearish fair value gap, validating it as an inversion fair value gap, also taking out this swing high here, which validates a change in state of delivery, then you start seeing a lot of green candles. You can trust taking a buy to this buy side liquidity here after it has retraced to other block with your entry. That's where your entry is going to be, or a bullish fair value gap. I just say that this is just trading from a level of support, but the difference between you and the retail guy is that you're waiting for more information because you don't know what the market is going to do. Meanwhile, they're just rushing in to take a buy just around here because it's at the level of support. If they do that here again, they would fail. But at this point, we are looking to take our profit, right? So if they do that here, they would fail because they are not waiting for more information. They would just see this as there's a level of resistance here, engulfing candlestick, and they want to sell. See, it goes against them. Same thing here. They'll see this buy side liquidity here. Then they'll see this as a pin bar hammer to the downside. They want to sell. It still goes against them. They don't have sound logic, sound narrative. For us, there are a lot of things we need to see before we trust this to be a sell, even if we want to see this as a sweep. So there are a lot of information you want to see. So that's just the difference between you and a retail trader, because they just rush in based on reaction, but you enter based on privileged information. Alright guys, so this will be it for the breakdown today. If you found this insightful and you're new to the channel, subscribe to stay updated for more videos and reviews like this. Trade safe. Till next review.